For decades, the UK public have been borrowing money from the likes of banks and lenders to buy their homes. We know this type of lending as a mortgage, and in exchange for their money, we're charged interest. However, there's a catch, and it's a big catch. Recent research has proven there are hundreds of thousands, perhaps millions of mortgages which are in fact what is known as a breach of contract and have been miscalculated when it comes to the interest applied by the lenders. As an example, a number of banks, for instance over the years of lending, have charged their clients interest on missed monthly payments, which as a result fall into arrears for the duration of the agreement. This is now what is publicly known as miscalculated mortgage payments. Whether it is a current active mortgage agreement over a standard 25-35-year term, or even an inactive mortgage, we are finding astonishingly claimants are owed as much as $150,000 due to miscalculation. This could have been the difference between these customers keeping their homes rather than it being repossessed, or the difference between you paying off your mortgage earlier than you actually had to. This is something that recently has attracted the attention from all of the country's major news outlets. One report, which was published recently, stated that major high street banks have officially announced they intend to pay back all of their clients affected, and they have put aside £300 million across the next 3 to 5 years in order to achieve this. However, experts predict that all in all, our very own banks and lenders could owe the UK public a staggering £10 billion in miscalculated mortgage payments. So, how can you benefit? Litigation funding. To make a claim against the lender, it takes time, it takes resources, and ultimately it costs money. Which is why, with an introduction from the Swingfield Group, you could have the unique opportunity to quite simply fund a claimant's case for as little as £4,000. So, how does this investment work? Simple. Your £4,000 will be assigned to a case whereby a claimant has a 75% chance of having a viable claim with a minimum of £20,000 owed by their very own mortgage provider. The £4,000 pays the initial costs of initial engagement and allocation of a qualified claimant, engagement of an SRA, Solicitor's Regulatory Authority Solicitor, the full expert audit report, all anti-money laundering and administrative work, quarterly itemised progress reports, and finally, ATE, after the event insurance from an FCA regulated insurer, which in the unlikely event that your claimant's case goes to court and loses, protects your initial capital. At the point of a successful claim, you will receive your initial £4,000 plus a percentage of the fees awarded to the solicitor plus a percentage of the award the claimant receives. This typically returns you a minimum of 31.25% as a litigation funder. Based upon previous cases, we expect results within 6 to 18 months depending on whether the case is settled in or out of court. However, once on board, you will be regularly kept up to date by the solicitor directly, and you will be notified of each stage of the claim as it progresses until settlement and payout. This is simple mathematics. This is not like a classic mis-sold claim which you see on an almost daily basis with the likes of PPI. This is based on facts and therefore is purely objective and not influenced by emotions, opinions, or personal feelings. Using the lender's agreements, which they have created for their clients, the checker identifies exactly where there has been a breach of contract and calculates how much extra interest their customer has wrongfully paid. We hope you found this video informative and we look forward to speaking with you. Please click the link below and book a call with us today.